Neal Soss, great to have you with us on Street Smart. So what do you take away from the ADP report today?
You know, the bias in the figures to be expected this week is up. A lot of that is statistical in the sense that we know that January's figures look to be very depressed by the abnormally severe winter weather we had. So I'm not surprised by it, and we're looking for a couple 100,000 jobs to be reported this week. The other feature that I think gives ground for some optimism here is that in these various consumer confidence surveys, households are reporting that they're a little more optimistic about the labor market. Ordinarily, that happens when their neighbor who is out of work gets back to work. So I wouldn't be surprised to see some nice upward adjustments to the last couple of months of job count. That's not to say we're out of the woods. It's to say that things aren't getting worse, that things are getting better, and the debate now shifts to, are they getting better fast enough?
Now, Neal Soss, I know that it's difficult to predict what's going to happen with the U.S. economy, but didn't you say that we were going to head to 10.5% unemployment? I think the highest reach is 10.1%. What happened?
Oh, I think that's close enough for this kind of purpose. But during the period of the recession, the unemployment rose more than you would have expected. Given the drop in GDP, you would have expected, of course, a loss of employment opportunities. But what actually was reported outshot that. And I think that's a sign that the workforce on the whole absorbed more of the loss of income associated with the recession than, for example, the corporate sector. Corporate profits have been doing pretty well. Labor incomes, not so. So now you're at a stage where the labor market seems to be turning. And the open question, of course, is will the workforce be able collectively to get back the share of GDP, the share of total income in the society they had before? I think the answer is probably not.
Neal, when you look at GDP, gross domestic product for last year, for 2010, 2.8%. That was the final print.
Yep.
You were looking for 3.5%. Are you a little bit less optimistic about the future?
No, and it depends very much on when you were looking for what, and averages and fourth quarter to fourth quarter measurements and so forth. But it strikes me that the story for this year is going to be very significantly the tug of war, if that's the right word, between higher energy prices, higher food prices, draining purchasing power, and on the other side, the tax cut, particularly the drop in the employees piece of the Social Security, the payroll tax, which in effect, so far at least, is at least more than compensating for that. That's going to be a tug of war, I think, all through this year.
Neal, just quickly here, won't that keep more people in the workforce? For instance, people who are getting older, won't they stay in their jobs longer? And won't that keep that unemployment rate fairly high?
Well, there has been some tendency in the last decade or so for the old folks, if you will, workforce participation rates to be drifting up. That seems to have come to an end now. And I wouldn't be surprised, because if that category is defined as 55 plus, which it is, that category of people is itself getting much, much older very rapidly now because of when the baby boomers got born. So it's been the case that the labor force participation rate has actually been going down. It's been going down for some time now. The part of that that is by far most troublesome is the prime age workers. Where are they going? Why aren't they getting back to work?
Neal, quickly, what's your call for Friday's unemployment report? What's the number?
200,000 round numbers, I think, is to be expected, and the unemployment rate perhaps drifting up just a touch because it's fallen so sharply in the last 2 months.
All right, we're going to leave it there. Credit Suisse Holdings Chief Economist Neal Soss, thank you very much.
Thank you.